Swati Kulkarni, who's Senior VP and Fund Manager at UTI AMC, joins us on the show right now. Swati, good to have you. Very good to have you on the show. What's your perspective on the kind of rally that the market has seen? Do you think we're good to go for more, or has the market pretty much topped out at here?
I think year to date, Indian markets have been the best performing markets, and there is a reason for the valuations were supportive, and you had a reaffirmation of the direction towards reforms in the announcements that happened in September. So, and of course, next year probably you could see a better GDP growth than what we have seen in fiscal year 2012-13. So I think based on this, the market is anticipating and discounting these expectations, and the rally could be justified from that angle.
Swati, specifically, I mean, one just gets a feeling that the market is pricing in a lot more than what happens on the ground. I mean, the PSU banking stocks were a case in point. While nothing happened in the banking amendment bill, it got deferred for a bit. But what do you do in some of these pockets which are in the midst of a reform process? If not underway currently, then will get underway in maybe days, weeks or months from now. And let's address them individually. What about banking? How do you do that? I mean, do you think the banking amendment bill will have a meaningful impact on some of these small-sized and mid-sized banks?
See, as far as I think banking rallies is concerned, there was too much of a concern on the asset quality issues on the PSU side. Now, if the growth revives and you can see the earnings momentum coming up, the valuation correction can always take place, like from 0.67 times book, these banks have come closer to one time adjusted book. So that trade was there, and probably that has played out. It's not necessarily to do with the banking amendments bill as such, but purely on the valuation, the pricing anomalies to some extent have corrected. So I think one has to be taking a stock specific approach to the whole space. Like if you talk about banking sector as such, you will have to have a mix of private sector and PSU, because private sector probably will have much lower earnings risk because of the asset quality that they have. Whereas on the public sector side, you will also have to ascertain what valuations are there on table, and hence those could be attractive from time to time.
Are you bullish? Have you bought into, or do you think that you would want to buy into real estate as a pack, while there are always perpetually disclosure issues, but somehow across the board, whoever we've spoken to over the last 25-30 days has been sounding bullish about the whole pack? I mean, if not some of the really small obscure names, but the more recognized names, almost everybody is bullish upon it. Have you done anything in real estate, or do you like the space at all?
We could have done it anecdotally in some of the stocks, but not as a sector across the sectors. We are not biased. In the space also, there were some pricing anomalies, and there were good companies which were having strong cash flows, less leverage on balance sheets, and such stocks have been looked at. And more importantly, it could be looked at as a rate sensitive, but I think from a broad generalized comment, I would say that we are still cautious on the sector.
What's the call on autos right now? Where are you most bullish?
Well, as far as autos is concerned, four-wheelers, auto sector, stocks have given good surprise on the earnings, and we like the two-wheeler and the four-wheeler space. We are looking at the CV-related, opportunities from a slightly longer-term perspective, but we are again choosy there. And this is mainly, from a perspective to have some exposure, considering the economic turnaround that might be on down the line.
Is that a theme that would work out for sectors like cement as well, Swati? I mean, these are sectors which are trading at highs, but the talk of the election year spend coming in and the economy turning up, helping capacity utilization levels as well. Do you buy the theme, or would you believe that valuations are lofty?
Yeah, definitely cement valuations have run up than what they were, say, 2 years back. But the expectations now is to have some kind of volume growth. The dispatch growth is likely to improve ahead of elections. That has happened in past. And the supply addition has been, quite muted compared to what the expectations were. So definitely there are supplies have increased, but the demand-supply gap, which was expected to be quite wide, that doesn't seem to be the case in the near term, and hence I think and the balance sheets are very good for these companies. They are at good dividend yield, so I think the interest from investors community could continue in this space.
So Swati, before we let you go, really, Swati Kulkarni's view from now for the next 6 months or the next 1 year, if you had to buy a top performing theme in your funds for the next 6 months or for the next 1 year, what would it be?
I think I would continue to have, rather than a thematic approach, I would have a diversified approach. The reasons being, there are expectations about the reforms, the rate cut, and also the recovery in the economy. So looking at these, one has to be cognizant about the global situation also, because we are talking about the fiscal cliff and the European drag on the economic recovery. So you can't be really taking a particular theme which can be just agnostic to these issues. So I would advise that we would continue to have a diversified kind of approach. Having said that, I think the investment related stocks, one has to be watchful. If there are any pure valuation plays, one can look at, because on the expectations that the investments theme as such perhaps will not gain momentum immediately because of the various issues on the administrative side of clearance of projects and the order flow momentum. But if these get factored too much, the pessimism on this too much gets factored into valuations, perhaps that could be the sector or theme to be watchful of. But I would again reiterate, a diversified approach would be better at this point of time.